The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 26th of June. A couple of days, we wrap up the month of June. Dow's down 155 at 38,956. So let me see. I was thinking that I should do this. Yes, I'll do this. So, look, we are still short from that 40,077 high on the 20th of May. The Dow then came down very sharply as the other indices were rallying. Then the Dow had a really strong rally, and technically, I should say that a buy signal should be upgraded to a buy mode, but I've waited to do that. We are still keeping that short position because we have, in the main, we have 3 times long positions as well. So this is a 1-to-1 small short position. And I'm anticipating that the Dow actually gets stuck here. It just kind of stalls. I'm not sure if it will make the D. Look, this is so interesting because the diamonds have already made a PD. So they were one notation in the Chapman wave ahead of the industrials. The YM, which is the Dow futures, has also made a PD. My leaning right now is to be kind of negative the market. We've raised quite a lot of cash, biggest cash position we've had in a long time. And it's not because I'm so negative on the market. I think the market's in a crash. If you look at the different sectors, if you weren't in those tech stocks that were doing absolutely splendidly, it's been really tough. And in fact, some of the long positions have given up quite good gains. So I'm suggesting to you that this is a period rife with strife. And that's on the shorter term. But look at this. The weekly chart of the Dow, U goes to a W formation, holding above the 9-period moving average. That is very good. The MACD's weak stochastic weak, the on-balance volume is a little bit overbought. The relative strength is also a little bit weak, but the 9 is still over the 14. That's a good sign. Monthly chart, let's wait until the end of the month before we discuss that in greater detail. Look at the S&P. The S&P right now, holding quite nicely. It's just down 2 at 54.67. We were short. We took a tiny little loss. I could have kept it. I wanted to keep it, but in fact, I've kept the stops very, very tight. Why? Because when we get this right, it's going to more than make up for these little losses, and I'd rather just be a little bit patient than chasing. I don't want to be chasing just yet. In the meantime, look how nicely the SPY is held, or the S&P. I should just take that away because it's done. We got in perfectly, but it wasn't perfectly enough. And even now it's up from where we got it. But most importantly, what I am looking at here is that weekly chart in leg E could be an alternate count. I've got a bunch of things that I could discuss. Maybe I'll do that on Technical Friday. Meantime, back at the ranch, what we're looking at in terms of the weekly chart is that the MACD is good, stochastic's flat at 93%. That's fabulous. Even the daily is still up at 81% in the stochastic. That's good. Now, what's very important as far as I'm concerned is that monthly, you see this long-term Chapman wave inside track repellent zone. So we're getting there. We're getting close. How we break either above or we stall in this level, the high just this month will be 56.25. And we're trading at 54.65. That's a tremendous way to go. But what's really important about this, let me just show you this here. I had it very faint. I decided to make it a little bit darker with the green and the red. This goes all the way back to, look at that, to the low of 666.79 back in March of 2009. Remember, we went long. The diamonds, the exact day of the low, that was for the Friday, March the 6th, and then the Monday was the low of the S&P. So I'm using that as your trend line support starter level, and it goes right through the high of 48.18 back in January of 2022. So, yeah, we're coming into the focus again. It's just a trend line, and the longer the trend line, I'm not going to say the less meaning it has, but the less power it has. Why? Because it's just so long. I mean, by then there's a whole multitude of different cycles have already been transversed. Okay, now what we're looking at is, so there's tremendous support. So the weekly chart says, there must be something that happens really quickly in the S&P daily chart to become very negative. But look at this. If you go to the IWM, the IWM is making lower lows and lower highs, still within a range. And even here, the 9-period moving average is positive in the weekly chart. That's number one. Number two is the QQQ is, look how superior this is, one of the best charts. Look at that, with that little doji candle from last week, suggesting that we should have some kind of a pullback, but the 9 is over the 14, well over the 14. The MACD is strong, stochastics at 93% on a weekly chart. On balance volume is getting a little bit overbought. And even here, what we're looking at is on the daily chart, yes, you've pulled back from 486.86 to the low of 3 days ago, around about 474.50. And where are we now? We're at 480.04. It's holding quite nicely up 56 cents. Let's go to the XLK, because this is where the action is. If we were in, look, there was a gap down. It's trying to fill the gap. It's at 226.99. The XLK, the S&P Select Tech Spider Fund. Weekly chart looks strong. The daily chart even is strong, even though it's pulled back a little bit. Not yet telling you a story. So you can tell what I'm saying is, there has to be something. It could be bonds. Look at this. The bonds are suggesting that yields are going higher. Look at that sharp move down under the 200-period moving average. It's down a point at 119.530 seconds. So I'm watching this very closely. But look at the weekly chart. It's struggling at the Chapman wave inside track repellent zone, which is trying to become a propellant zone. So let's look at Lennar stocks that are already in the yield business. Holding quite nicely at 149.16 with a V-shape, inverted V-shape pattern. So it's making lower lows and lower highs. When I say quite nicely, I meant that with the yields like this, you would expect that the 200-period moving average of 145.38 would be hit by now. And it's really struggled. It's making lower lows and lower highs, but it hasn't really broken down. And the weekly chart suggesting you've got a dreaded H that's starting to fail. It could start to move sharper to the downside with Toll Brothers. Looking at that, that's down 23 cents. Also holding quite nicely when you consider the way the yields have moved up. So with that said, I'm cautious. I'm looking at this, a scan saying, with that, this kind of, when I say bifurcated market, this is way more than that. This is a really unusual market in the sense that, look, if you go to the XLC, I believe it is. XLC. No, that's the communications. That's been fabulous. Why am I suddenly forgetting? I'm trying to get to. Let's go to GIS. So GIS is in the defensive area. That is General Mills. Oh, earnings came out today, down 3.52 and 53.73. Well, that's what I was trying to point out. That if you're looking at the defensive area, wow, I mean, these things have just been hammered. So it's been a very diverse market. Tech sectors held beautifully. I'll be back in a moment, and we want to be looking at, I had a question about this. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. I'm just trying to do this with the dollar and a couple of questions about the dollar. So before I finish this up, I had an email 2 days ago, just I think either as I was finishing the show or just after the show, and it was quite detailed, and it was someone I hadn't heard from for a little while, and they asked me a question, and the stock that they were looking at was coming down, 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 and all I was going to say was, you have to wait for a day or two. Well, I can't recall. I thought I printed it out, but I didn't. Then I also had another one that I did get from Larry R., and talking about husband. Yes, I followed him periodically for years, just a well-respected name. And I did read a chunk of what is it, like pages and pages of charts and charts. I did read quite a lot of it. I always find it just fascinating, but I don't really use it in my work because I do technical analysis. Mostly that's what I look at, besides the times that I look at my coda phases where the brokerage index is starting to scream to the upside and you're getting hysteria and bubble sectors. We aren't quite there yet. So the person who sent me that email that I've mislaid, and I went through all my different email, my different accounts. I couldn't find it. Please just send it again. If you can send it right now, if you're listening, I'm going to do my best to keep active with my different emails, because there's another problem that I've had, but I think I'm kind of resolving it. So with that said, I'm just going to go back to the dollar. The question about the dollar, how would it break out? Well, there's a left side, right side price time match, and I'm using it. It should go to. I haven't done it because of time. Let me do it as carefully as I can, because I need to go to the top of that candle. That's the way I always do it. Left side, right side price time match is bar symmetry. Number of bars from the high on the left side to the low in the middle to what you anticipate for the right side. That's going to be important. And let me just get no. Say no right there. Sorry. Okay. So that takes me to about early next week. And that just says that the high in the dollar index that was made right here On the 16th of April at 106.52, we're at 106.04. That would be my target. Now, if I did a left side, right side price time match, would this be working correctly? Let me just see. Goes to there. Yeah, that's the exact. Right, there you are. So that I like this very much. And it says, yeah, by early next week, the 106.70s, maybe 107 could be hit, but that would be my target. And key support is at 105. Whoops, 105.78 just in the very short term. Okay, with that said, what I want you to do is, okay, so I wanted to show you the EUR USD. This is the euro dollar currency pair down at the lows. It hasn't tested the low of May back at 1.0, around about 106.5. It's at 106.8 right now. The USD JPY, I said yesterday, is doing really nicely. I'm anticipating leg D. The Chapman wave, there's your leg D. And it's broken to a new multi-year high. This is very important because remember, indices or stocks, they go to all-time highs or all-time lows. They tend to stay there for a little while. So that just says, don't ignore it. And that's one of the reasons why I'm saying I'm anticipating that we're in this topping area, but it'll be a top that maybe because of the rotational aspect actually sees the semi area and the tech area take a bit of a breather while some areas start to really improve. Let's put it that way. I don't know about breaking to the upside, but improving. Perfect turn on the ES off that 786. Yes, that so far is a very nice move to the upside in the E-mini. Maybe I'll do that right now. Look, the E-mini had a trough F, and that was right at 9. Well, let me just see exactly where it was. Right there it is, at 9:30, right? It makes a low, and look how that 9-period moving average turned green, 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 and it's still green. This is the 1-minute chart. If you can believe that a 1-minute chart can last a long time. What is it, 10:37? Oh, it's almost an hour green without turning down. It can turn at any minute. I'm just saying at this particular point. What I said in the den much earlier this morning, I'd said that, I don't know if I can find it, but basically I said that the 55.34 10-minute charts, 200-period exponential moving average will become a magnet if it can hold for 20 minutes at that level. And then what you want to see is it becomes a support level. Okay? So we're watching that because we've already just hit that number. The next one is a 5-minute chart at 55.36. And we'll see, we'll go from there. Now the 200-period moving average in the 1-minute chart is becoming a support ABC. Yeah. All right, so I've done enough of that. Let me go to this. Now, there are a couple of things. I wrote them down. Finally, I'm going to look down at my notes, and my notes say Wednesday. I did discuss Larry. Oh, yeah, thank you, Larry, for the comments. And husband, I'm going to go through a little bit more because he's someone to be respected. He's done his work. Yes, he has been wrong for a few years. I don't care about people being wrong. It's their thinking, what they do, and if I can understand what it is that made their perspective incorrect, that's good enough for me. And I think that I did. I think he completely missed the aspect that as sectors go and as sectors roll from one to the other, the whole high-tech phase was absolutely important to the economy. That's really what he was missing, I think. All right, so I said I'd look at HIMS, H-I-M-S. It's been on our watch list for a long time. We once had it for a little while. It made a very nice top. This is HIMS and HERS, Inc., Personal Healthcare. Look, 25.40 was the high February of 2021. I chose the plumb line that said by 20. Whoa, where does that go? That goes by October of 2024. We should get back to the 25.40 level. It was at 2.72 back in May of 2022. Well, lo and behold, it did that in a lot quicker time than I had anticipated. It did that this month, and now it's pulling back, digesting gains. This is still very positive just purely technically. That's the 9 is still over the 14 in the daily. Weekly is very much, but it could digest gains. It could even have a 1-to-1 down to the 19 level. So yes, I like it very much. Would I get into it now? I personally would just wait a little bit. I'd have patience, because if you have patience and in fact at some point it can just digest these gains, hold the 20s and then pop to the 24. Anytime it can pop to 24.20, then it's probably going to retest the high that was made at 25.78, was it? I can't remember now. 25.74. All right. So with that said, now, okay, next thing was WHR. Oh, that was the question. WHR, I did write it down. Whirlpool. Okay. So, isn't that interesting? I'll be right back. Whirlpool's just capped up 12%, up 11 at 19.13. Must have had good earnings. That's a good thing. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
I'm just looking here. Yeah, so now I can't remember who was the WHR person, but first let me talk one step at a time. The S&P E-mini is down -9 at 5528. Remember, we were looking at this and I said that was the target level of 5534. Well, it went there exactly. I call it the magnet line. Look, it tried to get there. And the reason why I said it has to hold for 20 minutes, that's 2 10-minute bars, is because it's not going to be a magnet if it just tags it and then pulls away. But once it tags it, it means it's now active. And that means it could try to do it again. The next time it does it, that's absolutely imperative that it holds in that 5534 level for 2 10-minute bars. Because why? Then it's building that as a potential to become a support level if at any point it can hold even for 1 bar above 55, say 36. So that's, you go one step at a time. And there's your peak D in the 5-minute chart. Remember, peak D is where other things can happen. Boom, that's where it pulled back. Now we'll see if it's able to maintain the strength. Now, there are a chunk of things I need to talk about. So first of all, now I can't remember who I think it was Gary, the Whirlpool Corporation. So I just forgot that it was earnings that was being discussed, and it made the arch formation. Now with the housing sector, now the fact that there's less inventory in some sectors means that it keeps the price up, even if it's very overbought. As long as there's a scarcity, and you have to pay, you have to vie. I mean, as I was talking about just a couple of weeks ago, house across the street went for sale. It was, I mean, I don't even know how it worked because it went for sale the day of the open house. I must have been the first person that came in, bought it. So that's different. And this is in Newton, Massachusetts, and we have, maybe it's also the price sector. There's certain price sectors that are still in demand. Others people are waiting. So all I can say is I would have said to you exactly what I would have said to you. I think I got it on Tuesday after the bell, after my show, and then Monday after, and then yesterday I read it. So I would have said, look, you got to wait because there is still a demand. You know, Tommy talks in great detail about the housing sector and how things that, yes, there's been a slowdown, but actually at a certain price point, there is still a big demand. And I think that just tells you that it's very difficult to talk about an appliance when there is still demand for it. But there are if you read Husband, you'd say, oh my God, there's consumers slowing down, all sorts of things. And here it is. Yes, it's off the high of the day, which is 103.62. It's at 98, 5 points lower. But it's still holding pretty damn well. So all I'm saying is I would have been incorrect if I said to you, do anything. What I might have said is that if it drops sharply, watch the left side low in the 84s, because if it closes under that, that's really negative. But if it bounces, it has to hold for 2 sessions out of 3 above the arch high of the 12th of June of 95.54. And that still holds. What it's doing right now is actually quite positive. All right, I've got that out the way. Next question came in, and that was, British pound. Look at this. The British pound, now I can't remember why I wrote it down. British pound. The importance of the 200-period moving average. Look how it keeps trying to get there, and then it gets repelled. And it hasn't held and closed above the 200-period moving average for 2 out of 3 weeks, bars, that is. And it's going sideways, not breaking down yet in the daily. Now, am I going to remember exactly why? Let me open it up here. Walk in the 9-period moving average stuck between the 2 moving averages. That was just the price, the arch formation. And then the low that was made at 1.05, I think it was, British pound, September of 2022, 1.048, and then it ran up all the way to 1.31, and now it's trading at 1.26. So it's holding quite nicely, but the daily chart says be careful. Peak A, peak B, C, D, E, F, and a G, and now it's pulling back. So the 200-period moving average of 1.26 is going to be absolutely imperative to hold. Let's go on. We want to look at, lit. So this is so interesting. The question was on lit, which is Global X Lithium and Battery Tech. It did this arch formation, and the daily broke down a dreaded H pattern. The weekly is making an arch with so far the second week below the left side low of February. February of 41.84 is the high there. 39.26. It hit yesterday. It hit 38.92, I think it was. 38.87. And trading right now with a nice gap up. So lithium, I think lithium, look, here's the 200-period moving average in the monthly chart. It's tested it a couple of times. I think lithium's trying to form some kind of a base of support. That's really the base I'm talking about. I'm not talking about a rocket ship base. I'm just talking about a base from which it can test, and then start to move up like a cushion rather than a trampoline. But if by Tuesday of next week, the 9-period moving average, which is pink, which is at 40.37, that's not good enough. If it gets close to the 14-period moving average of 40.98, that's going to be the first sign in weeks that there has at least been an attempt to touch and cross over the 14-period moving average in the daily. But I think it's a work in progress. It's going to take a lot more. And this is interesting. This is to do with batteries, right? This is the Global X Lithium and Battery Tech. All I can say is the weekly on LIC was the other question. They have different charts. He's making a trough G. Okay, yeah, that's the one I was also asked about. And I just went to this one first. But LAC has a different chart pattern altogether. Isn't that fascinating? It just depends on what they put into their components. But in this case, 2.65, up 0.04. This is different altogether. This is lithium. This is Lithium American Corp. Of course, this is the stock. And this stock looks horrible. But when they move very quickly. I think what you've got, if there's a very strong single leg any day, that takes you into it's at 265, sorry. At any day, if there's a close above 283, followed by a second day, it's got to be straight away the second day, above 292, that'll be the first sign to say that the whole area of the 260s is trying to form as a base of support. That's on LAC, Lithium America Corporation. Basil Chapman, Dow's down 139, S&P's down 8. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, I'm just checking. So I got a note here saying nervous investors tear up ESG playbooks in election supercycle. ESG, I don't know what that is. Withdrawals from U.S. funds have accelerated. All right, well, let me just get back to this. So XPENG is a question that I had. It's up nicely today. It's the peak A, peak B. Remember this is your starting point. So let me do this, a nice exercise in the Chapman methodology. Look, the low that was made in Chapman Inc. designs, develops, and manufactures smart EVs. So this is China. So the low that was made at that's 655 on the 22nd of April starts to move to the upside. And it goes peak A right there, pulls back, and then it goes to peak B, pulls back very sharply, and then screams to about the 10.40s. And then what does it do? It comes all the way back, and now it's got another little one. Now, you remember, I always say the low bar cannot be a high bar if it's at a low, unless it's at a peak D. Well, this is different. This is just a pullback. So that can be called an A because here's your starting point. So every peak above this gets counted. That's the Chapman methodology. It's a pretty simple technique. All right. So what we do is that becomes another A, that becomes another B, and that becomes a C. So does it negate that C? Well, at this point, it doesn't matter. This is the one that you have to focus on at 8.13. I think there's a lot of resistance in the 8.30s. Let's see what happens there. But it is moving up, and the 9-period moving average is so close to crossing green, but it hasn't done that. MACD has crossed positive. The retro strength is improving a little bit. Stochastic's running, but it's still only at 52%. On-balance volume is very low. So this is a work in progress, but I think that most importantly, you need to know that 7.80 is your key support in the very short term. Okay, with that said, that LAC, it's a work in progress. It has to form those upside bars. Otherwise, it's making lower lows and lower highs. Another question came in. Where did it go? I wrote it down. Oh, you didn't. Could you go over gold and silver and the GDX? So gold right now, and this is going to be fascinating. Why? Let me show you something very interesting. Look. Here's the gold, down quite sharply. It's even sharper, down 22 at 23.07 in the arch formation, fading at a peak B. The last one fell at a peak A. So we're watching this very closely because the weekly chart, 9 is still way over the 14. To get that pink, you'd have to see gold down at the 2250 level. So this is a work that's unfolding, and now I can say you've got the relationship between the stronger gold and the stronger dollar and weaker gold. Hey, wait a minute, look at silver. Silver is up a little bit. It's up 18 cents at 29.05. It's in the Chapman inside track propellant zone right there. If it closes on a daily basis below 28.47, it's at 29.05 right now. I think all of them go back. But for instance, I wanted to be in the gold silver area. And then I thought, no. We tried it before. It didn't work. But then I went back to a stock that I liked because it was holding so well. And I went back in with a split position because I wanted to get in on not the gap up that day, but at least a little bit higher. I didn't mind. But then at a level that I really wanted, which was lower down. So at this particular point, on average, it's interesting because we're doing okay. All right. And that's been the whole thing, that within the context of the gold and silver stocks, many of the gold stocks have just been lambasted. Silver, some of the silvers have held very well. Can they go? I don't know what PAAS is doing. That's Pan American. Well, it's holding okay. It's not great, but it's holding okay. So it's not quite like the one we have, which is not just holding well, but it is trying to defy the gravitational pull of the weak metals market. So we'll see if that's going to hold. FCX, copper stock, is also holding very well. When you look at it this way, look, peak A, holding. Look at that beautiful left side, right side price time symmetry here. That's bar symmetry that we're looking at. From the low that was made back in April, around about the 47s, runs all the way to 55.24 on the May the 25th. That's the day we got the sell signal in the Dow. And now what we're looking at is it tests to the exact day from the midpoint to the right side number of bars. It broke it on the 17th of June, went to 46.57. But then look at that beautiful big spike to the upside. So Freeport McMoran, Inc., copper, and I think they have some zinc. I think they also have some other metals, but mostly copper stock doing very nicely. But the HG is making lower lows and lower highs. It has almost an Eiffel Tower look right there in the weekly chart. So I'd say that's just, I like the strength in something that's holding well when its root is starting to pull back. We'll see what happens there. Now, SMHs. SMH is semiconductor ETF, leg D in the monthly chart, peak F/C in the weekly chart, still with outstanding technicals. The daily chart has started to pull back. The MACD, the retro strength, the stochastic, the MACD, and yet that 9-period moving average, the resolute move of the green over the 14 has held it very nicely. We are actually short, but that's not the issue. The issue here is NVIDIA has kind of lost its luster in the sense that it would take any moment of upside action to be sharply higher at any point prior to the 23rd or 4th, the 20th of June. 20th of June, and since then, 6, 20, 24, let me just put that in. I think it's going to turn out to be significant. So I'm saying to you, there's a chance that we start a rotational correction. The tech sector starts to pull back, but there are areas within the overall market that, for instance, I did this before, XLC. Now, who would have thought that under these conditions, that especially when you're talking about communications and you're talking about cutting the cord, blah, blah, blah. Look at this. What a break to the upside. The all-time high was back in 2021, September. It goes to 86.35. And then it pulls back. No, it doesn't pull back. It breaks down. It goes to 45 back in November of 2022. Well, it's trading right now at 85.90 was the high. And I said that the high was 86.36 back in 2021. This is a beautiful V-shaped turnaround, and it's within an eye blink of an all-time high. You know, so that's what I'm saying, that there are areas that have worked. And then you can look at the IWM, and it is just struggling. It's not breaking down, but it's struggling. So it's a very select market. And the AIQ, and what was the question? Is the AI area still working? Is AI? Yeah, AI is made a peak, all-time high at 36.18 about 5 sessions ago. This is a Global X Artificial Intelligence ETF. Pull back, holding the 9-period moving average. but it's got the stalling formation right here. This is quite well. It should rotate and start to pull back very soon. We are long, but it should rotate. Let's take a breather. I'll be back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
There's that TTP, which is Taseko Mines Limited Copper Company at 2.45 down 8 cents right now. It must hold 240 to 220 key support. Going to early July. It looks like it's taking a breather after a fantastic move. So this is just, it's more than a breather in the sense that it was up in the 312-ish area, and now it's at 245 percentage-wise. That's a big deal. But I'm just saying, just in pattern-wise. So let me do this because I had it right here. Yeah, so FXI is the China large cap just going sideways, and I said that the other day that I think its biggest move is done. It's just now consolidating. So let me do this before we wrap up for today, and I'll hand you over to Steve Rhodes and all the great hosts. Let me do this. So the SMH is very important. The SMH is suggesting that maybe there's still a little bit more, a couple of flurries to the upside, but the high that was made, 279.57, that just might be the high for at least the next week or two. That'll be something to say, because you haven't been able to say that for a while in the SMHs. They just keep making new highs. That's the semiconductor. Number two is, as soon as we get bonds is really important. Oh, there was something I was going to do and I forgot. So let me just do this. Crude oil is holding well. Now it's just starting to digest gains. But if the TLT starts to pull back further, it's at 93.25, hugging the 200-period moving average for a couple of days. Now it's under it. If it starts to break into the 91s in the next week and a half, that is going to put some pressure on at least the areas that are related to the interest rates. And if you look at the XLF, it has started to pull back quite sharply in the daily, but the weekly is still holding and it's going sideways. So that's what I'm saying. This is a very specific market. I believe having cash is really important because it's going to tell you that you'll be ready to go to the next level and go right in on the next big pullback that gives you a bottom. We finally got our leg D in Microsoft. This is where we start to become a little bit cautious as the weekly kicks in. Have a great rest of the day. Check out my opening call day.